Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. market update. As you can see from the background, I'm still in the mountain cabin. I had planned to be back in the Dragon capsule for this evening's update, but Mother Nature had other ideas. The big news for the week, obviously, was the Federal Reserve did start the rate hike campaign, raising 25 basis points, taking out any doubt of that 50 basis point increase, so don't have to hear about that anymore. But they did announce that they're probably going to raise rates in 6 consecutive meetings, so 6 more rates on top of this for 2022. So yikes. They also said we're probably going to start the balance sheet reduction at the May meeting slightly earlier than expected, so most people felt like that was a little bit of a hawkish tone. The inflationary data this week came in the form of the PPI, or Producer Price Index. Think of that of prices at the wholesale level. It rose 0.8%, which was high, but better than the 0.9 that was expected, so slight piece of good news there, I suppose. And then you start to wonder, okay, if we do start to hold down the increases on the wholesale level, how do the wholesalers handle that? Do they bring the prices down at the consumer level? Or do they say, well, people are used to paying the higher prices now, and if we can get prices a little lower, we can create a wider spread for profit. Interesting dichotomy for the wholesalers if that trend holds true. And then last but not least, the market closed below 420 on Monday and then rallied strongly back to end the week. So is that it? Are we at a bottom? Was 420 the bottom? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. Taking a look at the chart of the SPY, you can see there's that close on Monday down below 420 and then rocketing back to the upside Tuesday through Friday. That makes twice that we've closed below 420 without a follow-through day. Our subscribers are used to hearing me say you've got to have a second day, a follow-through or confirmation day when you break a major point of support or resistance, major moving average, break out of a triangle, etc. Hasn't been able to do that. So you start looking, was 420 the bottom? You can see that we did test and retest that 420 level a number of times, and we have certainly made a bit of a move to the upside there. Taking a look at the moving averages, we're not even really that overbought, a little bit from the 10-day moving average, but not a tremendous amount. And then we want to talk about the death cross. I was asked to cover that in the last recording from the comments section. We like it when you leave comments under the videos. Appreciate that very much. The death cross is when the 50-day moving average crosses below the 200-day moving average. Now, often in history, that has meant that the trend is changing, so we start to look for the market to move in the opposite direction. So this case would be kind of confirming that we've moved into a downtrend. Even with the market rallying back to the upside, you can see that all we did was get back to that 200-day moving average. So was this bounce off of 420 just an oversold bounce, or was 420 the bottom? Really like to hear your comments here on whether or not 420 was it. So please post a comment under the video on whether you think the bottom is in. We're done. That's it for the downside, and back we go to the upside. All's forgiven with the war and interest rates and the Federal Reserve withdrawing liquidity, etc. It's all good. We're going to run back to new highs, or is this just a bit of a head fake and there's more downside to come? I'll give you my opinions here as we go through the charts. If you were wondering about that zigzag that I've been talking about, still in place. The big zigzag hasn't changed at all, even with this rally to close out the week. You can see we did break above the 38.2% extension that was on the way down. So breaking that level, but not even close yet to where the B wave correction was. We would have to violate that in order to disqualify this zigzag pattern. Now, what did change was that zigzag within the C wave. So what was creating a complex C wave within the zigzag pattern, that has moved. And that bears a little bit of talk here, because you can see now this B wave correction moved from this high over here on the 3rd of March to closing today. And that's at a 72% correction. Now, in reading Elliott's works, he didn't like it when the corrective move hit 70%. He felt like that kind of disqualified the pattern. Officially, it doesn't get disqualified till it hits that fib level at 78.6, but Elliot felt like, well, if it's going to go to 70, it's likely going to 78.6 anyway, so he kind of would get a little bit early on those corrective moves. In the end, it doesn't really matter, because as you can see, the C-wave extension of the complex zigzag, if you will, or the zigzag within the complex C-wave, is right about that same 400 level. So if the big zigzag is going to play out, then the little one will also. So the 70% argument becomes a moot point. I just thought I'd bring that up because it's interesting chatter from Elliot himself. All right, so if we take a look at interest rates, we can see that on the 10-year, we have leveled off towards the end of the week, but a pretty strong run back to the upside. So we had come down here, created this wave 4, speculation of money moving into bonds with the war starting, etc. Now that seems to have lessened. Perhaps the people that wanted to move into bonds have done it. Maybe money has come out of the bond market and gone into the equities market, helping to spur the rally. But whatever it was, that vertical move calmed towards the end of the week, and I think that's a positive thing. We know interest rates are going to go to the upside, but the market won't like it if they go flying to the upside. That's the one thing that will derail any sort of a rally bounce if that's indeed what's happening. And so I'll wrap things up with my opinion on where things are going in the market after we get through the rest of these examples. Let's take a look at the dollar. The dollar is consolidating here. It had made a pretty nice move to the upside. I'm happy to see the dollar consolidate. It looked like maybe we were going to give up some of this ground, and I'm okay as long as the dollar stays above 97. At least that's my personal view. You've heard me say numerous times I'm in favor of a strong dollar, so I would be concerned if it broke below that 97 level, but even if we break down from 98 to 97, I still think that's okay. And then in this 5-wave impulse pattern, you can see eventually we have an even higher target level on the dollar, and so hopefully that plays out. And we'll see if this wave 4 projection occurs now or if we have a new wave 3 high. Little bit of a descending triangle kind of forming here in the dollar, indicating some sort of a breakout move. Remember, a descending triangle does not indicate a downside move. Any triangle can break any direction. And oil, we have talked about oil when it was vertically to the upside. We had that quick one-day put when it just went so vertical it looked like it would come back down. Remember, you've heard me say this numerous times. When it goes vertically up, often comes vertically back down. Oil did that as well, so the vertical move up, right back down, and now we've consolidated here right at a 50% correction in the wave 4. And I was talking in Trade Finder on Tuesday night. By the way, if you haven't signed up for Trade Finder yet, please do so. You can do so underneath this video or by going to our website at ewotrader.com. It's a lot of fun. Tuesday nights, 9 p.m. Eastern Time, we talk the markets, we look at trade ideas, we have a live Q&A, so it's a great atmosphere. I'd love to have you come along if you haven't joined already. And so in talking about that Tuesday night, we had the one-day put to the downside, and then after this correction of the vertical move, I said my feeling was that I don't think oil's done with its upward move with everything that's going on globally, but I think it's going to be more along the lines of a crawl to the upside now, not so much this vertical stuff, a little less volatility as oil likely creeps back to the upside a little bit. From here you can see the new wave 5 target in the 5-wave impulse pattern, but what a great pattern. Doji there right at the top of the 3, good wave 4 at 50%, really nice 5-wave impulse pattern there in oil. Also in this week's Trade Finder, was asked to take a look at the Canadian market. We hadn't looked at that much, so I thought I'm going to go ahead and add that into this weekend's SPY update, market update, because look at that chart. Very impressive chart on the Canadian market, right back at all-time highs here. It's had a little bit of volatility along with the U.S. market, but not as severe as what's occurred in the U.S. markets, and certainly the U.S. market's not back near new all-time highs yet, so that's pretty impressive. I thought you might get a kick out of seeing that or be interested in seeing that because it is an impressive move. So the only question now becomes, with this vertical move over the last few days, is there enough energy right now to try to tackle breaking above that resistance level at 40 and go and make a new wave 5 target or a new target in the wave 3, new high in the wave 3 I should say, or do we need to rest? I would be in favor of resting a little bit here underneath this wave 3 move because it's just a little bit of separation from the 10-day moving average. So when you get a break, when you're already extended and you break a resistance area, it doesn't tend to hold. It comes back. So if you're long the Canadian market, I think you would want to see a little bit of consolidation under there and then try to make a new wave 3 high there on the way to an eventual new wave 5 high. Took a look at the IWM, probably wondering, as I have been all week, will this rally break us out of this 2022 trading range? I talked about it last week, so I won't go through that again. You can go look at last week's recording if you wanted to see more about that, but we have a trading range here on the IWM for 2022, and it happens to be between 190 and 210, and the answer is no. Even with the big rally to close out the week, we still didn't break above the resistance area, and we'll see if that turns and comes back to the downside. Looks like maybe that wave 5 needs more extension lower, but we're starting to build a pretty good trading range in there between that 190 and 210 level, as crazy as that sounds. Looking at the Qs, up till now the Qs had been the only market that hadn't gotten back to the 50-day moving average, but they did that in today's trade. So now even the Qs have been able to bounce back and test their 50-day moving average. The other markets exceeded them in today's trade, but look where that wave 4 is. If I take the moving averages off, you can see it's right at that 38.2% fib level. So perhaps we get a little bit of resistance here in the Qs, maybe ready to start that wave 5 to the downside. It would be a good spot to do it with that fib level. Or perhaps we go a little bit higher here and actually make it to this resistance level at 360, perhaps about a 50% correction in the wave 4. But it'll have to deal with that fib level right there at 38.2%. All right, let's take a look at Bitcoin, and you can see it still has a 5-wave impulse pattern. There's that same 38.2% level, so that's what I was talking about on the Qs. You can see how Bitcoin has struggled with that level. Will the Qs have that problem as well? We'll wait and see, but we still have a new wave 5 low to look at Bitcoin, but it hasn't broken out of the triangle yet. So if we take off the Elliott wave, you can see that there is that very well formed and getting even better symmetrical triangle here in Bitcoin, and at the time of this recording it is trading right around 41,000. So which way do we break? Do we break back to the upside and create a higher level wave 4? Remember, we can go up to 50 or 61.8% on the B wave correction and the 5-wave impulse pattern to the downside stays intact. Or do we break out to the downside and go hit that wave 5 target right now? I don't think we're going to have to wait much longer. We're right in the point of that triangle. So as I mentioned, it's well formed. I think Bitcoin breaks pretty soon. Thought we'd look at the Aussie market as well. Big, massive triangle. We look at this in Trade Finder on Tuesday nights. We have a lot of viewers and subscribers from Australia, so we like to include this market, and you can see extremely well formed and very large symmetrical triangle on the ASX. And so breakout Thursday and Friday, breakout day, clear breakout day on Thursday, decent follow-through day on Friday. If I had to be picky about it, I'd say that it's tough to call it a great follow-through day because it didn't even take out the previous day's high. Now, we did close higher, so that's kind of an iffy follow-through or confirmation day. Do you count it or not? You can make an argument either direction, but nonetheless, that is a really spectacular symmetrical triangle that shows that the ASX is going to make a pretty significant move in the not too distant future, if that move isn't underway already. Looking at gold, gold came down, and you can see right to the 61% level, and 175 has been a level of support resistance. We've talked about that several times in the past, so just above that level at 61%. If gold's going to hold, this is where it's going to hold. So perhaps we see a move back to the upside in gold. Same scenario here as what happened with oil. Too vertical of a move. Again, if it goes vertically up, often it comes vertically back down. You see it time after time after time, and there it is in gold. And so we'll see if gold starts to head back to the upside. I kind of feel that's going to be a similar chart to oil, where oil may creep higher, gold may creep higher as well. And last but not least, on the VIX, well, we broke the string, 16, almost 17 days. We almost got to 30 there on the 16th of March, but 16 consecutive days trading at or above 30 on the VIX. Pretty amazing stuff, but that's been broken now. The streak's been broken. So the question becomes now, is there any support for the VIX here at 25, or are we headed back down towards the 20 level or even lower if the market rallies. Remember the scenario that I gave you in the past as far as the fact that we could have a rip your face off rally, and that kind of sucks everybody back in thinking 420 was the bottom, and then all of a sudden we roll over and we head back down. Just as soon as everybody thinks it's safe to come in and buy stocks, it rolls over and you get that flush out low, that big almost panic spike selling. You break 420, that would obviously create a spike in the VIX and some panic selling, and then you have the real bottom. As far as my opinion on those two scenarios that I laid out for you, an old trading partner of mine and I had this expression, don't diss the zigzag. I'm still a fan of that zigzag pattern, and until that zigzag becomes disqualified, I still think there's a good chance that that could play out. So here's that zigzag pattern that I'm talking about. We'll see if it works out this time. I hope you enjoyed this recording. Hope everybody has a great weekend. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.